Tapering is clearly coming. That's according to some analysts, but is it a matter of weeks or just days before the US Fed begins winding in their bond buying scheme? And how are the markets reacting in anticipation? I'm Monica Gibson with the weekly wrap-up, and I'm asking John Cairns what's been moving and shaking the currency markets. John, first of all, how would you describe market sentiment at the moment? We've had a few rate decisions, policy meetings, etc. But to your mind, what is shaking up investors?
The big shake-up to global financial markets actually came last Friday with a non-farm payrolls figure. The shake-up was that despite a very strong figure, it appears that the market is not all that concerned about tapering. So you can explain that by saying the market is now price tapering, and you can see that in the price action. So the initial reaction in the first few seconds after the release was for risk assets, equities, high-yielding currencies, etc., to sell off aggressively, but then they actually came back stronger. So we started this week with the fears of Fed tapering receding. They've made a little bit of a comeback this week given the strong US data. And so the mood this week has been focusing on next week's Fed meeting, and really the focus has been, well, could the Fed actually taper next week? And it's becoming increasingly a possibility that they can.
Continuing on that note, not necessarily next week, but the latest anyone is expecting in surveys now is March with regards to tapering. But what is your outlook, John? Will Bernanke mark his last press conference with the beginning of the end of bond buying, or will he leave it for Yellen?
Yeah, I would say we're almost up to 50% probability that they're going to taper next week. The last Reuters poll was quite interesting. It showed the primary dealers, 50% were expecting the Fed to taper in March, 50% in Jan, and 25 in Jan, 25 in December, and 50 in March, which means no one was forecasting tapering beyond March. Since then, though, we've had four factors that suggest the risk of a December taper is higher. We've had the strong payrolls data. We've had the budget deal, and don't underestimate that. The worries that we could have another government shutdown was a clear constraining factor in the Fed tapering. Now that that risk has receded, it increases the probability of a Fed hike. We've had various Fed policymakers suggesting that the Fed should taper early and taper in a smaller amount. And then the other data, not just the payrolls, has been very good. So upward revision of GDP, strong retail sales. The market was saying 25% probability of a December taper, and it's probably closer to 50% now.
And at the same time, there is perceived to be a risk of the Bank of Japan easing again early next year. The yen is currently trading at record levels. But what do you think is in store for Abenomics?
Yeah, so Abenomics started off very, very well. We had a boom in Japanese GDP, and in the past few months the economy has cooled down again, and hence exactly what you're suggesting, all these calls for more action from the authorities, both fiscal and monetary stimulus. It remains a possibility, and the yen has been pricing that. So the yen pushing weaker against the dollar yen pushing upwards. Probably some more stimulus coming from Japan next year, and also potentially more stimulus coming from the Europeans. So the US is still looks like the center of growth, and where monetary policy is starting to be tightened, while everyone else in the core markets is still moving towards loosening.
A tapering of the Fed's asset purchases would curb the supply of cheap dollar financing that has spurred demand for higher yielding assets globally. How do you see the dollar trading against perhaps the strengthening euro moving forward? Is it a dollar story going on now, or a euro story?
Well, I think the whole market has been surprised by how euro-dollar has moved. So you've had an uptick in US growth expectations, very weak Eurozone growth, a Fed moving towards tapering, and an ECB surprising the markets with this dovish comment. That should all have been positive for the dollar, but we've seen euro-dollar pushing right up to that 138 level. So it's completely against market expectations and really took all these long dollar positions completely by surprise. However, Dren Merchant Bank, we're still of the view that ultimately what is going on in terms of growth and interest rate movement should be dollar positive. Okay, so it hasn't played out yet, but we would stick with the trade, keep on those long dollar positions. The biggest threat, though, is not on the majors. It's to the fragile emerging markets who have become addicted to the liquidity that has been pumping out of the Fed. It's going to be very interesting to see what's going to happen when tapering actually does happen. Has the market correctly priced it? Can emerging markets who've been running large current account deficits handle the pressure from high U.S. interest rates? So a lot of interest here in emerging markets about what the Fed is going to do.
And just lastly, we have German ZEW and a host of CPIs. But what else should our viewers be keeping an eye out for next week? Or is it all eyes on the Fed?
No, the FOMC is essentially the only major event. Remember, of course, as you suggested earlier, that will be followed by a press conference, and being the quarterly meeting, the Fed's economic views will be updated. So all focus on the FOMC, Eurozone, Chinese provisional PMI figures coming up, but it's the entire focus really should be on the FOMC.
John, thank you so much for your time and perspective. Well, viewers, that's all we have time for at the moment, but for more currency forecasts, click back to the website for this week's last edition of Targets in Focus with Elaine Stenson. Goodbye for now.